what we've found is that shareholders tend to be better customers. And so this is something that cruise lines have known for a number of years. If you offer shareholders an incentive to travel on their cruise lines, they'll show up again, because there's this connection that not only are they receiving some sort of reward, but by going on those cruise lines, they're actually improving the health of their investment. And so with our software, connecting those dots with consumer companies, we're able to show that when customers become shareholders, they become better customers.
Welcome back to another episode of the Bullish Studio Podcast. I'm Brian, CEO of Bullish Studio. Today, I am joined by Matt Joanou, CEO and co-founder of Stakeholder Labs. Stakeholder Labs is a new company helping bridge the relationship between shareholders and customers for publicly traded companies. I'm really excited about Stakeholder Labs as they are working on a very important topic, allowing companies to understand their most valuable customers and also their most valuable shareholders and bridging that relationship together. Please enjoy my conversation with Matt, and please make sure that you're subscribed to the Bullish Studio YouTube channel and follow us wherever you get your podcasts. Tell me a little bit about yourself. What's going on? Tell us about your background. What's up?
Yeah, well, first off, thanks for having me. Excited to chat with you. As you know, co-founder, CEO of Stakeholder Labs. We are a platform for publicly traded companies to digitally authenticate their shareholders. And what that allows them to do is engage more directly with retail investors and, most importantly, measure their effectiveness. We've been doing this for a year and change. Before that, I was at Reddit for about 5 years. So I saw the proverbial rise of the retail investor, had a front row seat to the power of communities, and the way before that, I was actually in digital loyalty and digital advertising. So have a non-traditional path into the world of corporate finance, but we feel like that gives us a unique advantage in how we approach shareholder engagement and what that means to this new generation of shareholders.
That's exciting. Yeah. And I think, a lot of the stuff that we've been discussing on this podcast really talks a lot about, retail investors, where they've been and where they're going. And obviously during 2020, 2021, we saw a huge rise of interest in stocks like GameStop, AMC, and others, and just generally in the market. And I think we're still seeing a lot of that traction in Q1 with a ton of retail inflows coming in from retail. So can you talk, I guess, a little bit about, what you saw at Reddit? And I think, with your experience in loyalty, what is the issue that you're tackling with Stakeholder?
Yeah, definitely. I think what I learned at Reddit was that small communities of self-organized fans or consumers that really care about a specific topic, passion point, or interest can have incredible leverage. And we saw that with the Wall Street Bets phenomenon, and really looking at what small individual groups of people were able to do when they interacted with the financial markets. And part of that is the confluence of trends that we've seen over the last 10 years. So this is not a new thing, but with the rise of consumer fintech, access is a lot easier for your average investor. They can download a Robinhood app, and within 20 minutes, they're trading. Financial literacy through platforms like Twitter, or now X, Reddit, FinTwit, has really hit a level that we've never seen previously. And then lastly, there's more of an appetite. So I think these trends started before the pandemic, but during the pandemic, you had several years of people that were forced to be inside. So they were discovering new interests, new hobbies, and leaning into the markets in a way that they never had. And what that resulted in is you saw the average age of a retail investor 4 years ago was 48 years old. Today, the average age is 35 years old.
Wow, that's huge. And as quickly as that dropped too. Just a lot of young.
In the last 5 years, 29% of retail investors are brand new. They've invested for less than 5 years. So we're seeing this revolution. But I would say that meme stocks they're isolated. They definitely signal what's been happening on a larger scale, but they're very unique. They have high elements of nostalgia. You look at GameStop, AMC, Hertz, BlackBerry, GMC. Yeah. Exactly. Mm-hmm. Like there's this nostalgia that millennials are feeling for some of those companies. But what it says about the larger market is that the rules of the game have changed a little bit, and individuals are a huge opportunity for companies to lean into, because most of them have some emotional connection to the company. They really care about the direction that the company is heading, and they want to be engaged with in the same way that these companies are engaging with them on a marketing level. They can apply that to shareholder engagement.
Totally. So Matt, we just got back from the Dumb Money premiere. What'd you think?
Fascinating. I think having been a part of this journey for the last few years, it's fun to see it in person. I think having worked at Reddit and seeing what we saw within that community, seeing the speed and velocity of that subreddit, the subscribers, the comments, the just attention it was getting, it's an exciting moment to see this on the big screen. I think the interesting thing is they've really crafted it now to have that mass market appeal. But if you go back to the book that this was based on, The Antisocial Network, it really got into the mechanics of why this worked and why this small community had this David versus Goliath moment. And while meme stocks have really caught the attention, I think it speaks to the power of community and the idea of a shared language, the idea of a shared mission, the idea of a group of individuals coordinating for a common goal was really elicited in a great visual format within this movie. So glad it turned out the way it did. I think everything was very impressive, and also excited for the next generation of investors to maybe use this as kind of a gateway into their investing world. So I enjoyed it. What do you think?
Yeah, no, I loved it. I mean, it's fascinating to see how Wall Street Bets went from just like a couple thousand, 100,000 people to well over 10, 15 million people in such a short period of time. Sure. The amount of action in that company, it was the only thing being talked about, in culture, not even on the internet, in culture. Everybody was obsessed with it. And I love the way that they kind of crafted everything together and told the story, and also kind of explained more in depth of like why these things happened for people that might not be aware of how short squeezes, like what they are, what happens when they, occur. And our good old friend Roaring Kitty, it was always, the fearless leader of everything. But yeah, I thought the film was great, and I encourage everybody to go check it out. And I think there's also a few other films coming out around, various different topics related to not only GameStop, but just the rise of retail investors and crypto booming. So really excited to see what else is coming down.
Yeah, I think what a lot of people forget within the financial markets are often these are human stories. Mm-hmm. And ultimately there is a human investing in the company, owning the shares, investing in a fund, investing in a financial vehicle. Mm-hmm. And as we've seen this rise of the retail investor, financial communities on the internet, I think it's a good reminder that these are humans at the end of the day, and they're making investment decisions based on their worldviews and their context. And that's a huge opportunity for the companies to lean into that and really connect with them on a human level. And through digital tools, it's easier than it's ever been.
Yeah, and I think that it's always really exciting about, especially with all these younger investors, a lot of them are self-directed. They're choosing their first stock to buy, and a lot of that is driven by, what's around them. And every investor, for the most part, is, a retail investor, right? It's, the benefit of the stock market and why it exists is so we can all get exposure to the growth of U.S. companies or companies around the world. But yeah, there's a lot of kind of challenges with that, because what always was surprising to me is that as a publicly traded company, if people go onto Robinhood and buy their stock, it's very challenging to actually understand who that person is and have a relationship with them. Sure. And I think, so can you talk a little bit about what you guys are doing in that world for companies and why this matters?
Yeah, definitely. So part of our suite of software allows publicly traded companies to digitally authenticate their shareholders. And historically, knowing the actual individual who is holding your shares has been difficult, because there are a number of intermediaries that hold the stock in different forms, let's say street name. And so with what we're able to do and this digital authentication, the publicly traded companies actually know Joe Smith holds shares of Nike. And so we can tell Nike, hey, this person, Joe Smith, holds these shares, and we can give them the opportunity to start engaging with them. And engagement can take a number of forms. It can be literally just giving them more direct updates on the financial performance of the company. It can be sharing news around product, around offerings, or it could be in the form of rewards. And a huge part of our platform allows publicly traded companies to provide rewards for loyal shareholders. So shareholders that have held the shares for a certain amount of time, that hold a certain number of shares. And the idea is that with this data, you can start to hone in on what does a healthy shareholder look like to a specific publicly traded company, and how do you engage in a healthy manner with these shareholders to effectively build more loyalty with that individual shareholder or a group or cohort of shareholders at the same time.
Yeah, I love that. And I remember like hearing back in the day that like if you own a bunch of shares in Carnival Cruise Lines, you could actually mail in your stock certificate and receive a coupon on your next cruise. And it sounds like you guys are bringing that, into the digital world, right?
Yeah, it's funny because you've had these programs for a number of years, and digital tools have really progressed in the last 10 to 20 years, and the shareholder rewards programs have not yet caught up to where those digital tools exist. And so we've really taken a lot of those same mechanics, but embedded software to allow you to build those programs more effectively and efficiently. So it's at a lower cost, you get a lot more information, and most importantly, you're measuring how effective are these programs.
Totally. Yeah, and a lot of these companies have, tens, if not hundreds of thousands of retail investors, and then hearing everything that, in the marketing world about how important loyalty programs are. Sure. You're bringing these kind of two unique data sets that a company, owns and bringing them together. So can you talk a little bit about, what is the financial benefit to a company, by being able to see into their shareholder base and also kind of compare that to their loyalty?
Yeah, definitely. I think you're touching on consumer companies. This is two sides of the coin. So one, we're looking at shareholder loyalty, but through our platform, you're also able to tie into their existing digital loyalty or CRM. And what we've found is that shareholders tend to be better customers. And so this is something that cruise lines have known for a number of years. If you offer shareholders an incentive to travel on their cruise lines, they'll show up again, because there's this connection that not only are they receiving some sort of reward, but by going on those cruise lines, they're actually improving the health of their investment. And so with our software, connecting those dots with consumer companies, we're able to show that shareholder X is customer X, and we're able to compare that to non-shareholders and prove that there's actually an incremental lift when customers become shareholders, they become better customers.
And that just makes sense in theory, right? If I'm a shareholder of somebody like Google, I'm probably a Google customer, and I want to, basically be able to promote that. And I think, bringing those two together makes a more loyal customer and shareholder.
Yeah, definitely. And this is one of the first times that the investor relations team can actually look at driving revenue. Mm-hmm. And again, what we're finding is that when given the choice, shareholders tend to spend their dollars with companies they're invested in. Mm-hmm. They have that brand recognition and that belief that long-term, that's better for the company and improves their long-term financial position as well.
That's amazing. So I guess, can you now talk a little bit more practically about the product? So what does the experience look like for, your average user? I have a Robinhood account and I own a bunch of shares of a bunch of publicly traded companies. What does the experience with Stakeholder look like?
Yeah, definitely. So not to get too into the weeds, but we've built an SDK that lives in the background, so similar to a Shopify or a Stripe, and can be embedded into the actual customer experience. So whether it's the Nike app or the Starbucks app or the Lululemon shopping experience, we can actually provide a button within that experience where people verify that they're a shareholder, and it's all opt-in. So the shareholder opts in, they provide their credentials, let's say they're holding their shares in Robinhood, to Robinhood, and opt in to sharing their data with Lululemon, Nike, or Starbucks, whoever it may be. And through that, we're able to map that data to them as a shareholder and also as a customer at the same time, and provide that data back to the customer to show this increase in shareholder loyalty or customer loyalty. And the other piece that we offer is standalone websites. So a lot of companies, as a first test of these types of programs, want to have something that's built out and stood up on its own. So we'll build a website as a wrapper where shareholders can land, they can verify that they're a shareholder, and it's all tied to a specific set of rewards that on the back end will talk to their loyalty program.
Love that. And, we've been working together on a partnership with Selina Hospitality. Do you want to talk a little bit about what that looks like and how it's been going? Yeah.
Yeah, of course. So Selina is a hospitality company that really caters to millennial and Gen Z travelers, folks that are working abroad. They have a very loyal customer base. And after they went through being on the public markets for their first few months, started to notice a trend that a lot of their customers were also shareholders. And they started to see that those shareholders were great customers. And so to reward that type of customer, they created a shareholder benefits program, and they rolled that out about a month ago. Through that, again, we were able to provide that data and map it against their CRM and start to understand, what did the shareholders care about? What was important to them? And the beauty and the kind of the virtuous cycle that was created is we're also starting to see them spend more at Selina's, to book more at Selina's, and advocate for these types of programs. So it's been an incredibly successful program, and really speaks to this next generation of millennial and Gen Z shareholders and customers, and how you can create that overlap that really enables the company to leverage that small group of self-organized individuals to their benefit.
Right. And even just owning a couple thousand shares, you can get pretty steep discounts to where, it all of a sudden, from a customer standpoint, it starts to really make sense to invest in the company and receive discounts, and you can, see a benefit long-term for that, and that's the company rewarding you.
Yeah, I think any benefit, again, it goes back to those 2 points of, if you're a Selina shareholder and you're looking at where to stay in, let's say, Mexico, and you have Hotel A or Selina, and they're somewhat comparable, I think you're more likely to stay at a Selina because of your investment. But to really sweeten the deal and foster that loyalty, giving that access to a party or that first drink or that discount on the room really makes these shareholders feel like they're owners in the company, and that Selina is saying, hey, thank you, we appreciate you as an owner, and we know that you're also a customer and want to give you these benefits.
Yeah, makes sense. And I think there's something like 6,000 publicly traded companies on the stock market, and you mentioned that your service is mainly focused on companies that are consumer facing, where there's a consumer relationship. What are some of the companies that you're excited to work with, or just talk a little bit about that?
Yeah, it's a good question. I would caveat and say consumer is definitely an area that we thrive in, but we are starting to explore more B2B, energy, manufacturing, because retail investors are investing in these companies. And I think knowing who they are and knowing why they made that initial investment is really important to the publicly traded companies, so that they can speak to them in a manner that makes sense, and that they can lean in a way that drives that long-term loyalty from those shareholders. Circling back to the consumer side, I think looking at companies that have that loyalty on the consumer side, so companies like Starbucks, companies like Nike, like Sweetgreen, where you have those very loyal customers, and you also have folks that feel like they've been on that journey with the company. So, for example, I am a huge Sweetgreen fan. I've been eating their salads for a long time, and being in the world that I was in, you kind of saw their journey, and you felt like you were supporting them as a customer. And I think when I would get to a city where there was a new Sweetgreen, I would be telling my friends, hey, like, the Sweetgreen just opened up down the street. And when they went public, that was that opportunity to actually buy into the long-term upside. Right. And I think companies like that can lean in and really double dip a little bit in their loyal customers who are already investing in other companies. Why wouldn't they invest in a company that they believe in as a consumer?
Right. With Lululemon, Ulta Beauty, very large publicly traded companies that have, diehard, consumer bases around them. And I think that makes total sense.
Sure, exactly. And I think the other thing I would say is, going back to my Reddit days, we would try to identify companies that already are starting to lean into community. And community is very broad these days, and it's used in a lot of different contexts, but you can see the brands that are supporting their communities on the ground. The brands that, like Lululemon, are supporting the yoga community. They're supporting now the running community, because that's what their customers care about, and they want to foster that sense of community on the ground, and they do the hard work. Building community isn't easy. It takes a lot of small actions at a grassroots level. And I think those companies on the public markets are ideal candidates for starting to understand who their shareholders are and engaging more directly.
Yeah, and we're also seeing this too with a lot of public company executives on Twitter, X, talk about, corporate updates. We've got, Spotify's, CEO and president is on Twitter actively talking about new updates or, correcting any misinformation out there. And I think you're seeing that more and more executives are leaning into this and finding, investor communities, because at the end of the day, institutional investors are looking for very particular things, and the war can be won with retail and other self-directed investors. So
yeah, I think it's a broad ecosystem right now, and I think the channels of communication are a huge opportunity to companies. And the examples that we're seeing in the market, again, there are different tiers. So you're seeing the kind of Adam Aarons of the world who are extremely active and they like to go direct to their shareholders. And then on the other side, you see the CEOs that are a little bit broader and they're using their platform for corporate communications. I think there's a lot of room in between. And really, again, it's about understanding who are your shareholders and what do they care about. Right. And you really can't craft a communication strategy until you understand who they are, what do they care about, and then do you want to get in front of more of those types of investors? Do you want to go after a different type of investor? But really understanding who they are is important to start, and then looking at, okay, what are my options? Are most of my investors at the retail level Gen Z? Are they on TikTok? Should we be using that as a platform? Is traditional email very effective? Should we go down that road? But again, it starts with understand who they are and then build a strategy around that.
Love it. Could you share, I guess, a little bit about where people can find Stakeholder and, a little bit about it?
Yeah, definitely. So we are on most of the platforms that I just mentioned, on Twitter or X under at Stakeholder Labs. We also have a newsletter that we push out every week. This is really taking our customers and a lot of the ecosystem on our journey of discovery. There's a lot of topics that are on that bleeding edge that are being discussed, that are being debated. And we like to share kind of our learnings and what we've been able to kind of understand through the discourse. It's called the Roundtable Roundup. If you go to our website, stakeholderlabs.com, you'll be able to click on the Roundtable Roundup and subscribe, and then on LinkedIn as well. And if anyone would be interested in learning more, feel free to reach out to me directly, Matt at stakeholderlabs.com. Happy to provide more information or just generally educate on where retail's at today, where we think it's going in the future, and what are the opportunities to engage.
Love it. Anything else you'd like to share?
I think we're good for now. Appreciate you having me on, Brian. It's been a pleasure to work with you guys and looking forward to more partnerships ahead.
That's it. If you're a publicly traded company, please reach out to Matt. We would love to see more of these types of partnerships and programs in the future. But thank you for tuning in for another episode of the Bullish Studio Podcast. We'll see you again next time.